Here again with Smart System. In our last lesson, we looked at the average directional index, an indicator which helps traders determine when the market is trending and how strong those trends in the market are. In today's lesson, we're going to look in an indicator known as the Parabolic SAR, which helps traders determine when to enter and exit positions once they've identified those trends. So let's get started. The Parabolic SAR as an indicator that, like Bollinger Bands, is plotted directly on the price chart instead of below it, and the basic idea here is that when the indicator is below price, you should be long and trailing your stop up with the indicator. When the indicator is above price, you should be short and trailing your stop down with the indicator. So you can see here, the general idea here, it's to trail the stop up with each consecutive dot, which forms when price moves forward, and here to trail it down, which forms when the indicator's above price. The indicator does not work well at all in ranges, and as you can see here on this chart of Goldman Sachs, if you do try and trade it in a range, you will get whipped salt a lot, and you're gonna get stopped out of positions. You're not gonna be very profit, or probably gonna take some good losses doing that. So the developer of the indicator recommends, although you can use it to enter trades, he recommends using it, and most traders use it, for the placement and the trailing of the stops, and they use other indicators such as the ADX, which was also developed by J. Wells Wilder, to identify the trend once they've entered the position, then to trail their stop up, and use the Parabolic SAR as their exit point. This sort of goes in line with some of the things that we've been talking about in previous lessons, that you want to have multiple confirmations here. So we've got the Parabolic SAR plotted on price, we've got the ADX below that, which we learned about in last lesson, and we've got the relative strength index. Let's look at an example here. We've got a long period of range conditions, which we learned about with the ADX. When the ADX moves above 20, after a long period of ranging conditions, this is a good signal that the range may be coming to an end, and a new trend may be forming. In addition to that, we have the crossing of the 50 line on the RSI, which is another indication that a bullish momentum is building. And in addition to that, we have a break above resistance, all occurring at the same time here. So we have sort of a triple confirmation there, that this may be a good trade to get long on. If we got long there, then the parabolic would have given us a nice run up, before getting us out on a touch of the parabolics are there, which we should have been trailing our stop up each day, with each one of those green dots as they formed. That's the general idea there, with the Parabolic SAR. So that's our lesson for today, and that also wraps up our lesson series on indicators. And while this is no means exhaustive, these are the major ones that traders use to trading. In our next lesson, we're gonna start a short series on candlestick charts. As always, if you have any questions or comments, please feel free to leave them in the comment section. Have a great day.